For years, China has been the Philippines' largest trading partner, shaping the very fabric of the nation's economy. The relationship is visible everywhere, from the bustling ports of Manila to the shelves of local stores, where Chinese-made goods are a daily presence in Filipino life. Every day, a vast flow of goods and capital moves between the two countries, fueling business activity and supporting countless jobs. Chinese investments and products have become deeply woven into the Philippine economic landscape, touching industries from retail to heavy industry. In 2024, China accounted for a remarkable 25% of all Philippine imports, providing essential materials and technology that drive key sectors like manufacturing, construction, and even agriculture. This influx of affordable goods and industrial inputs has helped local businesses grow and made products more accessible to millions of Filipinos. However, the trade relationship remains deeply unbalanced. China exports far more to the Philippines than it imports in return, resulting in a significant and persistent trade deficit that continues to widen each year. This heavy dependency exposes the Philippines to serious risks. Any sudden shift in Chinese policy or disruptions in the global supply chain could leave Philippine businesses and consumers vulnerable to shortages and price spikes. While access to affordable goods and industrial supplies has undoubtedly benefited millions, the growing trade imbalance is raising alarms among economists and policymakers who worry about the long-term sustainability of this economic model. Now, with rising geopolitical tensions and increasing uncertainty in the region, the Philippines is rethinking its reliance on China. Leaders are actively reassessing the country's long-term economic strategy, seeking ways to diversify trade and strengthen resilience. The foundation of this once stable partnership is now under intense scrutiny, as the Philippines navigates a more complex and unpredictable international environment, searching for a path that ensures both growth and security for its people. The Philippines-China trade relationship is a complex web, centered on electronics, raw materials, and agriculture. These goods are not just commodities, they are the threads that connect the two nations, shaping economies and daily lives on both sides of the sea. The Philippines imports essential components from China to fuel its vital semiconductor industry. Filipino workers transform these parts into finished electronics, which are then shipped around the world, including back to China, completing a high-tech loop that benefits both economies. Nickel ore and other valuable minerals flow from Philippine mines to power China's vast manufacturing sector. In return, advanced machinery, vehicles, and industrial equipment make their way from China to the Philippines, supporting local industries and infrastructure. Tropical fruits like bananas and pineapples are among the Philippines' most recognizable exports. These agricultural goods fill supermarket shelves across China, but this trade is often at the mercy of shifting political winds and sudden restrictions, making it a fragile lifeline for many Filipino farmers. This ongoing cycle of raw materials, electronics, and food has deeply intertwined the two economies, creating jobs, driving growth, and fostering interdependence that extends far beyond the ports and factories. Yet, the heavy concentration of trade with China also brings risks. Economic shocks, diplomatic disputes, or sudden policy changes can disrupt entire industries, leaving businesses and workers in the Philippines exposed and uncertain about the future. Now, the Philippine government faces a crucial challenge: how to sustain economic growth and opportunity while reducing the nation's exposure to a single powerful trading partner. The search for balance is underway. Tensions in the South China Sea have strained the Philippines-China economic partnership. Aggressive actions by Chinese vessels, including ramming and use of water cannons, have escalated the conflict and hardened Philippine public opinion. In response, the Philippines withdrew from China's Belt and Road Initiative and canceled several major Chinese-funded projects. This marks a clear pivot away from Chinese financing, as Manila links economic cooperation to Beijing's actions in disputed waters. The belief that economic ties could shield the relationship from political disputes has faded. Now the Philippines is urgently diversifying its partnerships to protect both its economy and sovereignty. Facing rising tensions with China in the South China Sea, the Philippines has taken decisive steps to revitalize its alliance with the United States. This renewed partnership is not just a response to regional security threats, but also a strategic recalibration of the Philippines' foreign policy, reflecting a desire for greater stability and support from a long-standing ally. The 1951 Mutual Defense Treaty has been reaffirmed, signaling a strong commitment to mutual security. Military cooperation has expanded significantly, highlighted by the largest ever Balikatan exercises, which now include new training scenarios and advanced technology. The U.S. has also gained access to additional strategic bases across the Philippines, enhancing both countries' ability to respond to regional challenges. Economically, the U.S. is playing a pivotal role in helping the Philippines strengthen its semiconductor industry through the CHIPS Act. This initiative aims to train thousands of Filipino engineers, foster innovation, and boost high-tech manufacturing capabilities, positioning the Philippines as a key player in the global technology supply chain. This partnership is about more than just security. It's a forward-looking strategy to diversify global supply chains, reduce dependence on China, and create new opportunities for Philippine exports and industries. By deepening ties with Washington, the Philippines secures not only a reliable security backstop, but also access to new economic opportunities, investments, and advanced technologies that can drive national growth. This strategic pivot aligns closely with the country's democratic values, its aspirations for self-determination, and its long-term national interests, reinforcing the Philippines' place among like-minded nations. Ultimately, the U.S. partnership offers the Philippines a viable alternative for a more stable, secure, and prosperous future, one built on shared values, mutual respect, and a vision for regional peace and development. To reduce risk, the Philippines is aggressively diversifying its economic relationships. Japan is a key partner, collaborating on infrastructure and energy, while ties with South Korea have expanded through new trade and technology agreements. Negotiations with the European Union for a free trade agreement could open access to a massive market and create hundreds of thousands of jobs. The Philippines is also exploring deals with Canada and seeking entry into the CPTPP, a major Pacific trade bloc. This global outreach is about more than finding new markets. It's a strategic repositioning within the world economy. Diversification enhances economic sovereignty and resilience. The goal, a secure, prosperous future, less vulnerable to geopolitical shocks. The Philippines is balancing continued trade with China while strategically diversifying its partners. New free trade agreements and investments in high-tech industries promise more jobs and higher incomes for Filipinos. Reducing reliance on a single market will make the economy more resilient to external shocks and political disputes. A diversified trade portfolio encourages investment and long-term growth. The country is moving up the value chain, focusing on advanced manufacturing and technology. This proactive approach aims to secure a stable, prosperous future for all Filipinos. The Philippines is forging its economic destiny through a network of strong, reliable global partnerships.